Hey everyone, Coach Investor back to another video for today. So let's talk about one of the biggest companies in the world, Amazon. If you see the stock price, it hasn't really moved much since mid-2020, right? You see all the other mega cap companies out there, Apple, Google, Microsoft, even Tesla, have gone up tremendously, but Amazon, not so much. But that might change in 2022 and further. First of all, in 2022, we might, I say might, see a stock split because spending over $3,000 to buy one share of Amazon, pretty expensive and doesn't really allow a lot of retail investors to invest in that company unless you have access to fractional shares. But if you do not, then you can't buy it. Second of all, maybe a spin-off of AWS. AWS, the cloud side of the business, which is growing very, very fast. We're going to talk about that in just a bit. Those two things might propel the stock even higher. I would love for both to happen, but let's see what happens. Right now, this is just speculative. But let's talk a bit more about the cloud side of the business. So this is from their last earnings report with more than $60 billion in annual sales. If you look at AWS, you just time it by 4. Amazon Web Services could be worth $1 trillion alone. If you give it a 20 times sales multiple or so, you reach that number. That means that for the rest of the business, everything you see above and under that, you will pay approximately just $700 billion, which include obviously the online retail business, offline ones, logistics, Amazon Prime, Twitch, Whole Foods, everything else. Sounds like a very good deal, no? And one other thing is that the fastest growing segments for Amazon, if you look back at the numbers, basically everything but online stores and physical stores, which are $54.2 billion. And the rest, the faster growing segments, are now more than that, are $56.59 billion. So that's obviously great to see. Some of those are also a bit newer segments. The fact that they are now weighing more than those older traditional segments for the business, that's great, especially since they are growing much faster. And touching on one of those accelerating segments, according to Group M, global ad spending will increase by 23% this year to $763 billion. Now, if we look back at the numbers, Amazon reported ad revenue has doubled since the second quarter of 2020 from $4.2 billion to $8.1 billion. And before I continue, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Now, touching back on AWS, the cloud part of the business, we have some other stats here. According to Fortune Business Insight, the global cloud computing industry is expected to grow from $219 billion in 2020 to over $791 billion by 2028. So now you see why a spin-off of AWS might actually be very, very lucrative for Amazon shareholders. And that's one of the main reasons why Amazon is staying very profitable right now, because the retail part of the business is experiencing some headwinds, whether it's COVID, supply chain issues, inflation, etc. That side is a bit struggling right now, but AWS is thriving in this environment. Obviously, this headwind can turn into a tailwind when we go out of this COVID pandemic, when those supply chain issues just become much better, basically disappear over time. Those headwinds might turn into tailwinds, and suddenly you have both parts of the business doing extremely well. And last thing, the average analyst price target for Amazon is at around $4,137, representing a 26% upside. If you ask me, 26% upside with very, very little risk of a lot of downside, because mega cap companies like Amazon will rarely crash 20% like other growth stocks out there, because they're so big, because, well, they're profitable, Wall Street loves it, funds love it, so the risk of it going down is pretty small. 26% upside to me is extremely good. And last two things, Amazon is actually the #1 stock pick for Barron in 2022. They expect an EPS of $51.37. You can see the full list here on the screen. Some surprising names, but #1 is Amazon. And then second of all, I just want to talk about some stats here. So 45 minutes, that's how much time passes between the moment you click place your order and the moment your package gets loaded on the truck. The speed here is incredible. That includes processing, locating, packing, scanning, and labeling your package before it hits the road. Now this is even more impressive. Amazon now receives 10 million orders per day. That's 115 orders per second. And, which is great for the US economy, 1 out of every 153 American workers is an Amazon employee. And this is why I will add Amazon as an anchor stock in our channel's portfolio. Obviously, on Stock Card, I can buy fractional shares, so that's exactly what we're gonna do. We usually buy around $1,000 worth of shares, unless it's a very, very good company, just like Tesla. So in this case, we'll buy again $1,000 worth of share, which is around 0.33 of a share. And that will be it for this video. Let me know down in the comments below which FAANG stocks do you own? Do you own Amazon? What are your thoughts on the company and maybe some moves this year? Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed yet to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.